Hi guys, welcome back. Wow, another day for the dramatic fall for all the Chinese education stocks. Today, we'll talk more about this, whether this is a good buying opportunity or is it something that you should stay away from. And then I will do a market update. And also, I will reveal the trades we recently did and suggest another 2 stocks for trading, okay? So, TAL had dropped another 6% today. At some point in the morning, it dropped as much as 15%. Now remember, this is another 15% after day of falling. Because just 2 weeks ago, it dropped 17%, and then last Thursday, 13%, last Friday, almost 10%, and today, another 15% in the morning, but close with only 6%. Only! Amazing! And it's not just TAL, also EDU, GOTU is already the best one, and YQ dropped 9%, etc. So, why did the sector fall again? Isn't it enough already? So, there was the news that the Swiss bank Analyst, Alex Xie, he had downgraded TAL and EDU, TAL from outperform to underperform, and the target price from 54 to 26. That is not even half of before. And EDU from outperform to neutral, and target price from 14 to 9.3. So I think this is the reason that drove another day of crashing for all the educational stocks. He analyzed, or let's say he suspects that the Chinese government would have more radical regulation to control the size of the education industry. The out-of-school education for K9, meaning from grade 1 to grade 9, and restrict the weekend and holiday lessons. But he still believes the strong demand and have confidence in the good management team. But at this moment, he thinks the risk in this industry has gone up too much that it's not attractive for investment anymore, and predict that this industry would still be more volatile. But given the fact that the risk or uncertainties have been to be reduced later, he thinks investors should still buy the dip when it's a good timing. So what do I think about this? Well, right now it is true that we don't know what kind of regulations the government would come out. This is uncertainty for sure. Because so far, whatever we have read online would be mainly speculation or rumors. It's possible that they just want to restrict the competitive marketing behavior, like over-exaggeration or overspending. So do they want to limit the number of hours? Do they want to control the marketing? Do they want to control the fees of the classes? Or do they want to control online education instead of offline? Now, if they want to control the time, the number of hours that the kids can go to class outside of school, then of course the education institutions would get less revenue because it's less hours. And that would totally depend on how good this institution is, because if, let's say, there is really restriction on the hours, then of course the parents would need to send their kids to more selective choices of school. So it means the market would be more concentrated in the leaders of the industry, as it will be turned from quantity to quality. So that would be more the competition of the quality of the classes. And the second possibility is to control the marketing. And that is not exactly a bad thing, because this was always a problem for online education business. Since 2-3 years ago, the online education trend has started and gave a lot of challenge for the offline education institutions like TAL and EDU, who were originally very strong doing what they did before, having offline schools, a complete franchise in all cities, until a lot of the new players came that focus on online educations. And they are using the internet business model's way to expand very quickly by spending a lot of marketing fees, fighting for clients. And since then, leaders like TAL and EDU were kind of forced to do the same thing, to overspend on their marketing and also expand to online education, because otherwise they would not be up to the competition, the new players spending massive amount of money to fight for parents' attention. To give you an idea, last year I checked that just a few leaders in this industry together had spent roughly 100 to 200 billion US dollars in marketing, and that is just a few institutions, the leaders all together. This has become the #1 expense, and this had accumulated to be roughly 6%, more than 6% of the total marketing budget across all industries combined. This is how crazy the marketing had become. It's for sure out of control. So we see a lot of the education companies, especially online education, like Dow with ticker symbol DAO and 跟谁学 ticker symbol GOTU, GOTU, and YQ. These online education, they may have fast growth year over year, but they have been losing money since the beginning. Like the more they sell, the more they lose. That is the online education business model, to use a lot of marketing dollar to get the fastest growth rate and fight for the parents' attention from the traditional education institutions like TAL and EDU. This is the curve of online education market size and the total addressable market projected all the way to 2024. So it has been growing 34% year over year, and later on 17%. But then you look at the curve of the marketing. This is just too crazy. The blue bar represent the revenue, while the red bar represent the marketing fees. So you see, the marketing fees takes up more and more percentage of the revenue, and in the end, the year of 2020 for GOTU, the marketing fee is as much as 80% of their revenue compared to 49% previous year. So most of the revenue. That is why there is no way they can make profit like this. And in this competitive landscape, when the industry is getting more and more crowded, then I guess the leaders like TAL and EDU would have to change as well. It's kind of like being forced to. As you see in this chart, it's for TAL, the blue represent their revenue and the orange represent the growth rate of the revenue. So even though we see the revenue had been increasing, the growth rate had been decreasing from 64% to 49% in 2019, and then recent year in 2020 it was 27% of growth rate. So for the traditional education company like TAL, because they were forced to increase their marketing budget by 29% to $420 million just for marketing, and taking up 37% of the revenue. It's not as crazy as GOTU to be almost 90%, but 37.5% is still a lot. But even so, their revenue growth rates still decrease. So if you look at the financial report from the company, you can see that they have been making profit for a long time year over year with steady growth until the recent year. They had first reported loss for the entire year because of the competitive landscape of the online education and the crazy spending on marketing. It had made a company with steady income, steady growth of profit to slowly become at loss. And we are talking about the leader of the industry. So that is why I think it might be actually a good thing to try to control the marketing spending for everybody, because this is just getting out of control And companies like TAL, they were forced to do this as well. As when you have so much noise in a room, the only way for you to get heard is for you to speak louder, because no one wants to be quiet. Before the online education companies appear one by one, recent years, TAL and EDU were doing just fine, right? They were more focused on improving their class quality. That is what caught my attention at first for TAL. I always thought they are a good company because the leader always focused on the quality of the product of the lesson. And he's quite passionate about education as well. So they never really had to overspend too much on marketing. So marketing budget used to be a small part of their expense. So they can really spend more money into hiring good teacher, improving their lesson, their product. And then because of that, it would turn into better word of mouth and attract more customers. And this is all a good cycle. That was the good old days. So maybe if the government can restrict this kind of crazy marketing spending, it might actually be good for leaders like EDU and TAL, maybe. Another possibility for the government is to regulate on the fees. As we said before, they want to encourage more people to give birth to more children. That's why they want to reduce the stress of the kids, the stress of the parents, and also the money spent on education. So maybe one of the ways would be restricting the fees of the education outside of school, the K9, the K12. But we just saw that the marketing fee was in fact a big part of the revenue right now. So if the institutions manage to reduce the marketing fees even just by half, it would significantly increase their profit margin already. So I guess reducing the fee would be somehow manageable given the fact that marketing fee can be reduced. And they did say they need to regulate on online education, and this is what I just said. The online education is taking advantage of the internet business model, doing the same like a lot of the internet startup, because they usually start with spending a lot of money, especially on marketing, to scale up and lower the cost. But the premise is to gain a large group of customers to begin with by spending a lot of marketing dollar. So that is the business model for online education. But in my opinion, I always feel that online education for kids, especially younger kids, they don't work as well as offline education. It is much better for the kids to have face-to-face interaction with the teacher. Especially younger kids have very limited attention span, so it would really be a problem and affect the quality of the lesson. So if the government really is cracking down the online education, it would mean the offline education companies might actually benefit from that. Companies like EDU and TAL, they were offline mostly before. But of course, it would mean the growth would be more slow and steady. So in general, that's why I think the government's policy on regulating online education, I don't know exactly what ways they're going to do it, but in general, I do think that in the end, whoever with the best quality of lesson and the business model that makes sense would win in the end. But of course, in a short term, it's still full of uncertainties, and investors hate uncertainties because we don't know what's going to happen. When the actual regulations come out, how would the market respond to it? Would it cause more dumping of the shares? Then in this case, it would make sense for a lot of investors or institutions to sell out of their position and wait for further clarity. But at this point, it is really gone down very heavily. TAL has gone from the top of $90 to the low of this morning of $25. So 72% of the company value had been gone. And for EDU, 61% of the value. And yet, those are not the most unbelievable, because for GOTU, from the highest of 149 to the lowest of 12, this is 91% of the company value gone. So it's like a Black Friday sales plus Boxing Day plus Cyber Monday all together. This is how crazy it is. But of course, because GOTU focus more on the online education, so they are affected more than the other two. And also because their business model rely heavily on marketing. As we saw, they spend most of the revenue on marketing. But of course, because they drop for a reason, it's a lot of fear going on, a lot of uncertainty. I would understand that. It is truly like a fire going on and everyone is trying to run away as fast as possible. If we look at the institution ownership for TAL, the top holders are Bright Unison, Bailey Gifford, UBS Asset, Morgan Stanley, Hill House Capital. But I think after the Q2 filing, we're going to see complete different holdings now. Either they shrink down their size significantly or completely sell out of the position, perhaps, because this is not up to date. So what did I do? I bought in the dip in the morning at the price of 26, and I think this is the 5th time I enter my position in TAL. 5th or 6th, I don't remember. This has got to be the stock that I got in and out the most times out of all the stocks. Every time I just took profit and got out of the position. Last time I entered again, I said I hope I can hold it longer this time, and turn out I still sold it at slight profits, okay? I had shared that to the Discord, and I don't know if anyone followed my buy, but you need to be aware that it is quite risky at this point, as the analyst addressed to. But I really think right now at this point it's gotten into quite a fair value. Last week, my Discord member asked me, is it a good idea to add TAL? And I said I would wait for opportunity. At that time, it was dropping from 32 to 30. So I thought I could wait for it to drop to somewhere around 24 or maybe even 23. But this morning it got to 25, so close to my price target already. This morning when I shared this in the Discord, I set the stop loss at 25.2. But at this point, I think we can set the stop loss, increase it to 27. So then we can still book in some profits, even though it continue going south. But I hope it doesn't. I want to keep this longer this time. I know I say it all the time, but this time I really want to keep it longer. To be 100% true, I even bought some call options this morning, but I didn't share it because I don't want anyone to follow. It's too risky at this point to buy the call option, and I would set stop loss on that to be around my cost, so at most I would just not make anything. I don't know if it has really bottomed, but I do think it's getting close, because at this stage I would think it's driven by FOMO of short sellers. I think at this point whoever taking still short position might be mostly retail investors, not institutions, because I don't think institutions would be shorting the stock right now at this point. It would be mostly retail investors, I think. So I hope the short sellers opening position now would get really burned. But you know, right now it really reminds me of Airline and cruise line last year in March. Now remember I shared with you before, I bought a lot of Airline and cruise line last year in March 20, this day. I remember it was the Friday. There were a lot of fear going on at that time. Especially cruise line would be the most affected by COVID, as we should still remember the Diamond Princess. A lot of people thought at that time that all these businesses would go bankrupt, especially none of the cruise lines register in US, so none of them are protected by the US government. So no one would dare to catch the falling knife. But it's usually like this. Opportunities usually begins when there is the most fear, and we know what happened after. It went from the highest of 133 to the lowest of 19. So near 80% off. Very similar with the online education right now, because there's too much uncertainties going on, but it doesn't mean the company assets just disappear, because they do have solid assets. For TAL, I'm not 100% sure whether right now it is the most fear moment, but if I get stopped out with some profit and it reach lower lows, let's say if it gets to the range of 21 to 24, I will buy it back, but with a much bigger position and call options. But of course, long-term call options, because it does take time for things to get clear. But at this point, it's very hard to reject a good company at a very fair value. And I do believe that the whole point for the government to regulate this industry is to solve a lot of problems I just mentioned before, and also to reduce the stress of the kids and encourage more birth. But the last thing they want to do is to destroy entirely an industry. It is not their interest to kill all of the companies, and by destroying such a big industry in China would diminish a lot of job positions, and it is not what they want, that's for sure. So I think after the darkest moment and after the dust settles, after all the uncertainties get clear, I do think we would know by that time which one is the good company, because this might be a process of elimination. It might eliminate the small companies, especially the ones that have not figured out the business model on how to make money. So at this point, if you are interested into catching the falling knife on education stocks, I do think the leaders like TAL and EDU would be a much safer choice out of all the devils. Okay, this video has gotten to be too long, so I guess I'll talk about the other stuff in my next video. Okay, now if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.